Hello, everybody, and welcome to Street Smart Investing. I'm Albert, and pretty much I'm your host, and I'm here to continue the videos for the advanced medical equipment and technology sector. There are 91 companies, and I am on number 84. So I only have 7 more left, and this has been a long series for this, and pretty much. I think I have decided the next sector, and in between that, I'll probably do something fun in between, probably a dividend choice or whatever, or come up with something in between before the next sector because I know people um, might want to see other things and just more excitement in the videos that I do. So, disclaimer: I'm not a licensed investor or advisor, so please speak to one if you're gonna buy or sell in the stock market. It's very risky, although it's a risk to reward scenario in the stock market. Again, please speak to somebody who's licensed and insured, which I am not, because I surely do not want to get sued. So, again, the stocks that I do mention, it's for reference and education. It's okay to watch list it. You can do that. I know in my previous videos, I do make opinions as to if it's pretty good to look in a portfolio. But again, that's just my own thought process. So if you're gonna do that, again, you still gotta speak to somebody who's licensed. And if you decide to do it on your own, you still gotta do more research as to your price points. And if you decide to sell, you have to do that research as well, and how long you want to hold on to it. Everybody has their own different strategy and how the way they do their work, how long they want to hold, and uh, so forth. So everybody's different, is all I'm saying. So if you do see me say watch listed, and if it's good on a portfolio, again, you can just use that as a sample uh, portfolio. It's not a recommended portfolio. That's the only thing I can say or do. Um, and that's pretty much it, just for my disclaimer. So let's begin with the first um, company that I have on here. It is number 78, HBIO. As you can see, before I even start, you see all these X's, and yeah, none of these companies are worthwhile. And you can see why. If you see my previous videos, you can tell that all these numbers are ugly on all these companies. So let's start off with the first one is HBIO at $3.66. This was yesterday's prices, so they're pretty accurate again, and these are weekend prices, so they are up to date. So next up is the market cap. It's at 142.53 million. Earnings per share, again, that's a small company. Anything in the millions is usually small. So I just, me personally, I don't like companies like that. But again, this is the research that I found for you guys. Again, the source that I use and the app that I use is Webull. You can use this app on a phone or laptop. It's called the Webull app. Just type in Webull, and as you can see, these are where I get my numbers and my source of information and my data from. Uh, I just happen to know what this information is, and I am relaying it to you guys. So the earnings per share is negative 0.21. Yeah, negative 0.21. PE ratio is negative 22.38. That's the price to earnings ratio. I don't like that at all. The debt is at 51%. That's way too high. Cash flow is at 150,000. So again, I don't like those numbers. You know, the EPS, PE, debt, just horrible. So next up is number 79, MOTS, as some people would see that as, but the abbreviation for that really is MOTS at $1.09. It's almost a penny stock. Well, to me, anything under $5 is a penny stock, or under $10, because companies like that, they can just lose value so fast. And um, again, I'm pretty sure some people might agree with my opinion, but the stock market is not the real economy. So they are just separate. And, all these numbers with the cheap companies, they're just getting bailed out. So you're going to see a lot of up and downs, and all these, you're going to see like a dollar share go up to like $5. It don't seem like much. Oh yeah, only $4. But when that gets referred to as percentages, yeah, that's pretty high, from $1 to like $3 or $4. So again, a lot of these really cheap companies just exploding on prices, and it's just insane. There's no like fundamental uh, reference on the evaluations that's going into it. Everything is all technicals lately. So that's pretty much how the stock market is. So the market cap for MOTS is at 31 million, well 31.56 million to be exact. X means not watch listed, horrible numbers. As you can see, it's at earnings per share is at negative 0.87, PE ratio is at negative 1.39, debt is at 51%, and the cash flow is at 2.4 million. They're positive, but again, even if they still need a lot of work. Yeah, so they just got a lot of growing up to do, anyways. The numbers are okay compared to all the other companies there. That's the only decent one. All the other ones are pretty crappy. This is not too bad, but the cash flow sucks. So, anyways, number 80 is HSDT at 47 cents. That's definitely a penny stock company. It's horrible. I don't like companies like that. I'm sorry. They're very, very risky. It makes no sense to invest in these. But the market cap is at 18.14 million. Earnings per share is at negative 0.56. PE ratio is at negative 1. Really no numbers that can turn around maybe this year. But again, the cash flow is awful. The prices, even at these low numbers, again, the prices are just horrible. And the market cap still needs a lot of work. So, yeah, I don't know. It's just, even if you wait another year, it's just again, it's a lot of waiting, and that's too risky, in my opinion. So there's other companies out there. So moving on, and again, I keep interrupting myself, but as I do the video, I don't edit my videos. I just go through a straight walkthrough, and I just like to do the footage for you guys and show everything in between. So I like to say things throughout the video that's insightful. That anything comes to mind, I just kind of go with the flow. I don't really like keep things separate. Like, oh, let me just talk about this first and then say my opinion, because that's just the way I roll, and I know my time limit anyway. So the debt on this company is at 38.4%. Cash flow is at negative 20 million. And the next company up is MDGS. It's at $1.53. Market cap is at 11.72 million. Awful company. Just I don't like that market cap. Too low for me. But to each their own. If you like these cheap companies, and just because they're really cheap, and you think you want to make even a 10 cents gain or whatever, then that's all on you. Be my guest, and take a shot at it. I just don't like these. So yeah, the market cap is at 11.72 million. Earnings per share is at negative 0.17. PE ratio is at -9. Debt is at 39%, which is not too bad, but ugly numbers overall anyway. As you can see, yeah, the price and the market cap. Then this cash flow is at negative 3.66 million. And X'd it. I put an X on it. So next up is number 82, PROF, which is PROF at $15.85. Market cap is at 299.64 million. Earnings per share is at negative 1.26. PE ratio is at negative 11.97. So you can run that off to 12, negative 12. The debt is really low, which I like, but again, the cash flow is awful. Cash flow is at negative 8.8 million. Next up is MBOT or MBOT at $8.16 per share. Market cap is at 58 million. You see I put an X on it, meaning I don't like it and it's not watch listed. I just don't like it for a watch list. Earnings per share is at negative 2.14. PE ratio is at negative 2.55. That seems okay at 36.5%. The cash flow is at 27.77 million. So almost half the company's in cash, or they must have got a grant from the government or something like that, because yeah, a lot of these companies will not survive off of that, and they just have that injected into the markets, Wall Street and all these big CEOs. So again, ugly numbers overall on these 7 companies. So last but not least, number 84, which is OXFD at $14.34. Market cap is at 372 million. Put an X on that one as well, not watch listed. Ugly numbers. Earnings per share, negative 0.59. PE ratio, I couldn't even find the PE ratio. I'm sure it's probably negative as well, just because of the ugly numbers, with negative earnings and negative cash flow. I'm assuming the PE is negative. So the debt is at really low, actually, 8.57. That's hardly nothing. Under 10% is just amazing. But ugly numbers. Maybe it can turn around. Who knows? Earnings per share is really low, but again, they have trouble with the cash flow right there. And yeah, that's something to look out for. So again, maybe this year they might not do good. Maybe next year, if they're still around next year, maybe they can do better. But again, there's always companies in the IPOs getting added on. So, who knows? Companies come and go, and stocks come and go, and money comes and goes. So, thanks for watching, and I will see you in the next one. The next video will be most likely, I've been leaning towards, so I already did all the letter A's. I still like one more sector with the letter A, and that will be the automobile sector. I know you guys, I've seen videos and people out there just like the automobile sector. They like the new company Nikola. I was paying attention to that with the SPACs, which is SPAC is a special purpose acquisition company. And basically, these are companies that take over and acquire companies that need capital. And they inject that into their company so they can get the IPO. So automobile sector will be next. Thank